It's Tuesday, May 8th. Thanks for bearing with me. Haven't done a video in quite a while. We're going to look at the 10-year yield today. This is a monthly chart. You can see going back to the peak here in the early 80s. Rates way up there. Anyway, you can see the big bull market in bond prices, bear market in yields. And kind of bottomed out there in 2012, 2016 as a possible double bottom. So let's stick with the heavy lines first. This is a pretty good trend line from 94, and that was a pretty important year for bonds, so it's a good place to start, even though it's not the peak. And you can see that is just getting broken to the upside there. Momentum is pretty good in the monthly format. And then you have a tighter line here. Now this line does a pretty good job of describing the kind of medium term for the yield, and you can see it's really got a lot of touches here and defines the trend pretty well. So you have a breakout of sorts right here from the shorter line and just breaking out from the longer line. All right, here in the monthly time frame, momentum not bad, not the greatest. It still looks all right, better than not going up. All right, let's get rid of these heavy lines and zoom in on the other lines. All right, what we have here is a set of fan lines. Now it's not perfect because you could really define this in several ways. The concept of fan line is that you have three lines, kind of looks like a folding paper fan, and you draw the first trend line, it breaks to the upside, comes back to test, and then you establish a second trend line, comes back to breaks it, comes back to test, and then the third break is supposed to be the end of the whatever it's doing and a change in direction. Now I could have drawn this middle line, could have drawn that there, and that would have worked. But we're looking at this in hindsight, and I'm going to leave it the way it is here. Now, back in this area in the 90s and early 2000s, I wouldn't have seen this pattern. But now, now that it's 2018, I can see it, and I'll just leave it like that and say these are the fan lines. And this third one is the important one, and that is broken to the upside. So that's a good sign on the monthly chart here. You can see support was at late 2011, 2012, and then the 2016 low. Well, let's zoom in a little bit. Let's go to the weekly. You can see that the trend line or the fan line was pretty much broken. And when did this happen? That's right around the election in 2016. So definitely a change in tone in the market here. So yields going higher. What I'm going to do now is take a parallel line to the support. And this tells us that it is pretty close to resistance, if not at resistance. And if we come into the daily, get a little more data here. If we come into the daily, you can see something interesting here, and that a little waning of momentum. Guess we didn't have to zoom in. You have the waning momentum here. That's a bearish RSI divergence. So that tells us that this resistance is pretty likely to hold for now, for the short term. Let's go back out a bit. Actually, let's get to the weekly. You can see momentum is pretty good here, and a breakthrough. I'm sorry, we got to go to the monthly. And a breakthrough here would be a good sign for the long term. Again, so short term, possibly overbought or waning momentum at resistance. Longer term, does look like a breakout to me. I'm going to measure the height of this channel, this range, bring it up here, grab another parallel, see if it makes sense as a target, and it kind of does. So for the long term, this is not a short term thing, it's a long term, 475-ish, that type of rate would be a long-term type of target. I'm going to say long-term, I mean 2 years, maybe 3. So it's not really anything to panic. I know Mr. Diamond looking for a 4% yield. I think a little higher than that is probably warranted, but it's got to get through this barrier first. So no reason to panic, and does look like a change in major trend for interest rates.